I've been investing for just over a decade now, and around 6 years ago, I had about 100 grand invested over 9 different funds. I had a spreadsheet, I rebalanced. Every month it felt like I constantly tracked it. I felt really clever. But today I've got over £420,000 invested, and it's in one fund. I'm going to tell you what changed and why I'd never go back to that. The exact fund I invest in, I'm going to share with you in a second, and what it's actually returned. The fund I've had over a decade now has returned close to 13%, which is absolutely mind-boggling. And the fund is, as you'll see, the FTSE Global All Cap Index Fund, and that's an accumulation fund. So what accumulation means, for those of you who don't know, is anything it makes is reinvested. So it constantly keeps reinvested the earnings as well as the contributions that I put in. So it's got 420 grand in, and that's it. I've got £420,000 in there. My pension's actually in there. And this is my entire portfolio, not hiding anything from you. That's absolutely every penny I have in that portfolio. And that changed a lot. And, a lot of people on YouTube and financial gurus, and I am none of those, will tell you, that you need multiple different funds. You need to diversify. They'll have so many different spreadsheets and trackers to keep track of everything. I like to keep it super simple. I am not a genius investor. I know very little about investing, but these ETFs and these funds enable me to still successfully invest without knowing much. And I actually think my, call it ignorance, or my lack of knowledge with regards to investing has actually been my strength, because I've put the money in here, I've left it, and I've tried not to even track how it's performing other than an annual review that I have to see how it's doing. And it's across thousands of companies across the world. So it means that I'm diversified in this fund. And, people say you should have money in property, you should have money in different funds. The S&P's been doing better. Fair enough. And all of those could be true, but they also could be absolute nonsense. But what I know is that this keeps it simple. It means I don't have to make any decisions. I don't get decision fatigue. I don't spend hours looking for different funds. I'm sure we've all had that moment where you're looking through Netflix, and before you know it, you've spent an hour and you've not found anything to watch. So for me, this just keeps it really, really simple, and it's performing really well for me. And the truth is, it's really boring, right? But that also is good, because it means I don't check it all of the time. It feels like I'm not doing anything. It feels like it's almost on autopilot. And that's the beauty of investing. There's been a lot of research done, and the best investors are normally dead people. And the reason for that is because they can't touch it. They can't tinker with it. They can't try and time the market. Investing is a really strange thing, where it seems like, from my research and from my own portfolio and the anecdotal information that I've got firsthand, but also from a lot of people whose opinion I value and trust, it's almost one of the few things in life where the less effort you make, the better your results. And the finance industry needs to justify itself by overcomplicating things. They want these fancy funds with all of the different, balancing acts and cryptos now included, and then God knows what else. But in truth, simplicity really is the key to being a successful investor, and that's certainly proven well for me. And like I said, over the last 10 years or so now, I've earned over 10%. And since I had this one fund, it's returned over 13% for me, which has been absolutely mind-blowing. And now, with such a huge sum of money for me, which I've been able to accumulate, those returns are doing all of the hard work for me. I still invest regularly, so I try and put at least £750 a month into there, plus pension contributions. But now, the actual compounding is doing the hard work. Like I say, last year, and staggering amount, and made over £40,000 in the fund. Well over that, actually. I don't have the exact number, but it was a hell of a lot of money. Like I said, this might not be the answer for everyone. If you're genuinely really interested and you want to look at this, can you get better returns? Probably. I don't know. Nobody has the answer to that. But for me, this just keeps it really really simple. It's not open to human error, because I don't touch it. I just leave it alone. And it means it's easy for me to be disciplined with it. My direct debit goes out when I get paid. Pay yourself first. I think, as I said in The Richest Man in Babylon, that's why all of your direct debits for the companies you owe come out your bank on the first of the month, because they know by the end of the month, if you leave it, you won't have that money. So do that same setup with yourself. Pay yourself first. And then leave it, forget about it, and let it compound. And once it starts to do that, at first it'll seem like nothing, but 2, 3, 4, 5 years in, it'll start absolutely skyrocket. And when you get to kind of a decade or plus like I am now, it'll blow your mind how quickly these returns start to take off. So, like I said, I'm no financial expert. I'm not giving any advice here. I'm simply sharing what I do and what I've done to build a portfolio worth over 400 grand. Tell me I'm wrong. Tell me I should be looking at more funds. You tell me. Or if you're similar to me and you keep it really simple and you've got one fund, let me know in the comments below. I'd love to hear from people and see what you're doing. And if you are interested in this kind of journey and, you know, that honest take on investing and a very simple approach, then subscribe. I'm going to try and make sure I have weekly videos. So I will see you on the next one.